Stop scrolling. Seriously. If you have money sitting in a bank account right now, you need to hear this. And I don't mean that in a clickbait way. I mean it in a, this could genuinely affect your savings, your access to your own money and your financial future kind of way. Most people have absolutely no idea what's quietly happening behind the scenes in the banking world right now, and by the time it becomes obvious, it could already be too late to do anything about it. So stay with me for a minute, because I'm going to explain this in plain English from the beginning, and by the end of this video, you're going to understand exactly what's happening, who it affects, and most importantly, what you need to do to protect yourself. Let's start with the big picture, because this story didn't begin yesterday. It's been building for years, and 2026 is shaping up to be the year where everything comes to a head all at once. Here's what a lot of people don't realize. Banks in the United States, and really around the world, are not just places that hold your money. They are heavily regulated institutions. They operate under layers and layers of rules set by federal agencies, international bodies, and government regulators. And those regulators have been quietly tightening those rules for the past several years. New compliance requirements, new anti-money laundering laws, new Know Your Customer standards, new digital monitoring systems. All of it is rolling out at once right now in 2026. And the banks, in order to stay compliant, are doing something that is shocking millions of people who weren't paying attention. They're shutting down accounts, quietly, often without much warning, and in some cases, overnight. Now, let me slow down here, because I can already feel some of you thinking, okay, that can't happen to regular people. That must be for criminals or fraud cases. And I completely understand why you'd think that. That's what most people assume. But here's the thing, that's exactly the part that's catching people off guard. This is happening to ordinary, everyday account holders, small business owners, senior citizens, freelancers, people who've had the same bank account for 15, 20 years, and they're waking up one morning to find their account frozen or a letter in the mail saying their account has been closed, with a check for the balance mailed separately, and no clear explanation of why. Let me give you a real sense of what this looks like on the ground. Imagine you're a small business owner. You've had a checking account with your bank for 12 years. You pay your employees through it. Your clients deposit payments into it. You pay your rent, your suppliers, your taxes, all from that one account. And then one Tuesday morning, you go to log in online, and the app tells you your account is restricted. You call the bank. You're on hold for 45 minutes. And when someone finally picks up, they tell you that your account has been flagged under their compliance review process and that you may receive further communication in the mail within 7 to 10 business days. 7 to 10 business days. Meanwhile, your payroll is due on Friday. This is not a hypothetical. This is happening to real people right now all across the country. So let's talk about why. Why is this happening, and why is it happening now? Stay with me, because this part is important. After the 2008 financial crisis, regulators around the world started cracking down much harder on banks. They introduced something called enhanced due diligence requirements. Basically, banks became responsible, and I mean legally, financially responsible, for knowing exactly who their customers are, where their money is coming from, and whether any of it could be connected to fraud, tax evasion, or criminal activity. The penalty for getting it wrong? Massive fines. In some cases, hundreds of millions of dollars. So banks started being extremely cautious. They started building internal risk scoring systems. And if your account triggers certain flags in those systems, the bank can, and often will, close your account. Even if you've done nothing wrong, even if you're a completely law-abiding citizen. And here's what a lot of people don't realize about those flags. They're not just looking for obviously suspicious things like huge cash deposits or international wire transfers. The triggers are much more everyday than that. Frequent cash deposits, even modest ones, can flag your account. Inconsistent income patterns, like if your deposits go up and down a lot from month to month, can flag your account. Using peer-to-peer payment apps like Venmo, Cash App, or Zelle to receive payments for goods or services, especially if those payments are frequent and come from multiple different people, can flag your account. Certain types of businesses, like cannabis-adjacent businesses, cryptocurrency, firearms dealers, adult content creators, even some nonprofits and religious organizations, are considered high risk by many banks, and accounts associated with them are being closed in large numbers. Let me take a step back and explain the specific wave of closures that's really accelerated in 2026, because there are a few things happening simultaneously that are making this worse than it's ever been before. The first is something called Operation Choke Point 2.0. Now, the original Operation Choke Point was a federal program from around 2013 that encouraged banks to cut off financial services to certain industries that the government considered high risk, things like payday lenders and firearms dealers. It was controversial. It was eventually shut down, but the approach never really went away. In recent years, there's been a resurgence of pressure on banks to debank, that's the industry term, to debank certain types of businesses and individuals. And in 2025 and into 2026, that pressure has intensified significantly. Banks are being told, essentially, that certain customer profiles carry too much regulatory risk, and the path of least resistance for the bank is simply to close the account. The second factor is a major upgrade in AI-powered compliance monitoring. Banks have always monitored accounts for suspicious activity, but the systems they're using now are dramatically more sophisticated than they were even 3 years ago. These AI systems analyze your transaction history, your deposit patterns, who you're sending money to, who's sending money to you, and they make risk assessments automatically, often without any human ever reviewing your account. If the system flags you, the closure process can begin without a banker ever looking at your file. And that's exactly why so many people are getting no real explanation, because in many cases, there isn't a human who made the decision. A machine did. The third factor, and this is a big one for 2026 specifically, is the implementation of new IRS reporting thresholds. For a few years now, there's been a rule that payment processors and banks need to report transactions above certain thresholds to the IRS. The specific numbers have shifted around depending on legislation, but the direction has been consistently toward more reporting, more scrutiny, and more data sharing between banks and the government. And as banks prepare to comply with these expanded reporting requirements, they are proactively closing accounts that they believe will generate regulatory headaches. It's easier for them to close your account than to deal with the paperwork and potential liability. Now, here's where I want to be very clear, because I don't want anyone watching this to panic in the wrong direction. This is not about the government seizing your money. This is not about the banks stealing from you. If your account is closed, you will, eventually, get your money back, usually in the form of a check mailed to your address on file. But there are two serious problems with that. Problem 1, the timing. Eventually can mean days, weeks, or in some cases, months. And if that account is your primary account, the one you use for rent, groceries, utilities, you're in a very difficult position in the meantime. You might not be able to pay your bills, you might bounce payments, your credit score could take a hit. And all of that is happening to you even though you did nothing wrong. Problem 2, access to banking going forward. Here's what a lot of people don't realize, and this part is genuinely alarming. When a bank closes your account due to compliance concerns, they often report it to a database called Check Systems. Check Systems is essentially a credit bureau for banking. Most banks check it before opening a new account for you. And if you're in Check Systems with a negative report, even if the closure was completely unjust, other banks may refuse to open an account for you, which means you could find yourself completely locked out of the traditional banking system, unable to open a checking account anywhere, unable to set up direct deposit, unable to pay bills electronically. This is called being unbanked, and it can affect your life in ways that go far beyond the immediate inconvenience. So let's talk about who is most at risk, and then we're going to talk about what you can do. Because there are real practical steps you can take to protect yourself. The people most at risk right now are, first, small business owners, especially those in industries that banks consider elevated risk. If you're in any kind of cash-heavy business, if you deal in cryptocurrency, if you're a freelancer or gig worker with irregular income patterns, pay very close attention. Second, people who use payment apps heavily, Venmo, Zelle, Cash App, PayPal. If you're receiving payments for any kind of goods or services through these platforms, even informally, your bank may start asking questions. Third, people with older, inactive accounts that suddenly become active. If you have an account you haven't touched in a while and you suddenly start moving significant money through it, that can trigger a flag. Fourth, and this one surprises people, nonprofit organizations and religious institutions. Banks have been quietly closing accounts for churches, mosques, temples, and nonprofits because the compliance burden of managing them has gotten too high. Now, what do you actually do to protect yourself? Let's go through this carefully. The first thing you want to do is diversify your banking. Don't keep all of your money in one account at one institution. If that account gets shut down, you want to have access to funds somewhere else while you sort things out. This doesn't have to be complicated. A simple savings account at a second bank or even a credit union. And actually, credit unions are worth paying special attention to here because they are generally less aggressive about account closures than large commercial banks, can be a real lifeline. Second, know your rights. Banks are required to give you notice before closing your account in most circumstances. They are not required to tell you why, but they are required to give you your money. If your account is closed and you are not receiving your funds within a reasonable time frame, you can file a complaint with the Consumer Financial Protection Bureau, the CFPB. That complaint carries real weight. Third, check your check systems report. You are legally entitled to a free check systems report once every 12 months. Go to checksystems.com, request your report, and review it carefully. If there is an inaccurate negative item on your report, you have the right to dispute it. And this matters a lot if you need to open a new account somewhere. Fourth, if you are a business owner or a freelancer, get ahead of the compliance questions. Keep clean, organized records. If your bank ever contacts you to verify the source of funds or the nature of your business, respond promptly and professionally. Banks are much less likely to close an account where the customer is responsive and transparent. Fifth, and this is something not enough people talk about, look into second-chance banking options. Many banks and credit unions offer accounts specifically designed for people who have had banking problems in the past. These accounts typically have some limitations, but they give you a path back into the banking system if you ever find yourself shut out. Now, I want to spend a moment on scams, because anytime there's a story like this in the news, the scammers follow right behind it. And there are already scams circulating that play directly on this fear. You might get a call or a text or an email claiming to be from your bank, saying your account has been flagged and you need to verify your information immediately to avoid closure. Do not do it. Hang up. Delete it. Call the number on the back of your bank card to verify if you're concerned. Real banks do not ask you to confirm your full social security number, your PIN, or your password over the phone or by text. That's always a scam. Let's also talk about what's coming next, because 2026 is really just the beginning of a longer trend. Regulators are moving toward a world with much more financial transparency. Central bank digital currencies are being piloted in multiple countries. Real-time transaction reporting to tax authorities is expanding. The financial system is becoming, in a word, more monitored. And as that happens, banks are going to continue to shed the customers they consider too risky or too complicated to manage under that increased scrutiny. The customers who are best protected are the ones who understand this, who keep their banking diversified, who keep their records clean, and who stay engaged with their financial institutions rather than just hoping nothing goes wrong. I'll tell you something that I think is worth sitting with for a moment. The people who are most affected by account closures are often the people who can least afford to be. People living paycheck to paycheck, small business owners with thin margins, families where that checking account is the hub of their entire financial life. And the system, as it's set up right now, doesn't do a great job of protecting those people, which is exactly why I think it's so important to talk about this, to share this information, and to make sure people know what's happening before it happens to them. Because here's the thing, if you know about this, you can take steps. You can open that second account, you can check your check systems report, you can have a conversation with your bank, you can keep better records, you have options. The people who get truly blindsided are the ones who never saw it coming. So don't leave money on the table, and don't leave your financial security to chance. Check your accounts, diversify where your money sits. Know your rights. Share this video with someone you care about, a family member, a friend, a small business owner in your life. Because this is the kind of information that genuinely makes a difference when you have it in advance. Stay informed, stay ahead of it, and take care of your financial future. You've got this.